What's my favorite Michael Burry stock to buy in March? I'm going to answer that question in this video. I'm also going to support why it's my favorite stock to buy in March with 4 or 5 different metrics. So let's get right into it. Michael Burry, of course, has been in the news lately talking about how he's so bearish about the overall economy and expecting a stock market crash, and his portfolio was more defensive, I would argue, in the previous quarter than the latest update that we got. So recently we got Michael Burry's portfolio update in February for his holdings as of December 31st, 2022. And the changes in the portfolio has me believing that Michael Burry turned a little bit more bullish. I don't want to say extremely bullish, but the portfolio is certainly not as defensive as it was 3 months before. Okay. Notably, he added some holdings that are going to benefit, are poised to benefit from the economic reopening in China. And that's where my favorite stock to buy is from his portfolio of 9 stocks. Okay. So here's his holdings for 9 stocks: Geo, BKI, Coherent Group, Alibaba, JD.com, Wolverine Worldwide, MGM, Curate Retail, and SkyWest. So of these, my favorite is for March to buy is Alibaba Holdings. This is one of his newer additions that he bought in the fourth quarter, and this is actually my favorite Michael Burry stock to buy in March. And let me show you why. So, looking at Alibaba's quarterly year-over-year revenue growth, you saw very nice growth all the way until about, let's say, 2021, and getting into 2022, revenue growth started to really fall. 8.12% negative in its most recent quarter, which ended around December 31. So that's the latest update we have from Alibaba Group. Now, Alibaba has a presence in several markets worldwide, but its most lucrative segment is in China. So it derives its largest share of revenue and profits from its segment in China. And up until the last, I would say, 2 months, China's been in an extreme economic lockdown, right? The reopening really only started in January, I would say, where it started to really gain momentum. But that's not yet reflected in Alibaba's results. So right now, what investors are seeing is all this downtrend, but the recovery is not yet embedded in Alibaba's results. That's likely to turn around as the economic reopening in China continues. So far, the government in China has left the economy alone after reopening. They haven't reopened and closed and reopened and closed in 2023. They've just reopened and they've let it play out. If that continues, then Alibaba is poised to benefit from that, and that recovery could cause a overall rebound in Alibaba's revenue. And then look at this next metric here, Alibaba's operating profit margin for the trailing 12 months. It was operating at an excellent operating profit margins, albeit it was trending downward, but it was still, even before the outbreak, it was at 15%, and then that fell even lower down to 12%. But that's coming back up now, you can see. With the economic reopening in China and the recovery of its largest market, its largest revenue and profit market, this is likely to continue rebounding back towards the pre-pandemic levels over 15%. And then look at Alibaba's earnings per share. Look at that nice upward trajectory there up until the pandemic in 2020, which caused earnings per share to fall to $1.84 in its most recent earnings release, right? So if this recovers even to, let's say, half of this point to $5 earnings per share, that's a big upgrade in the earnings per share compared to the price you're paying, which I'm going to show you that it's not very expensive either. In fact, I would argue the stock is cheap, but that's in a couple of slides. Before that, let me show you the cash flow from operations over the trailing 12 months. Again, it's been on a downward trend, but a cash flow of operations of 17.5% is still really, really good. And if it recovers to anywhere near where it was before the outbreak of, let's say, 32%, that's nearly twice the level where it's at right now in the recent trailing 12 months. So even at 17.5%, that's not many, many businesses worldwide would love to have a cash flow from operations to sales of 17.5%. But Alibaba is likely to rebound, it's likely to go higher. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And finally, one of my favorite reasons why Alibaba is my favorite Michael Burry stock to buy is its relatively cheap valuation. It's trading at a forward PE ratio of 11.48. That's near the lowest it has been according to this metric over the last 2 years. You haven't been able to buy, you've scarcely had an opportunity to buy this stock at a cheaper price. And if you compare this to a more expensive, let's say, Alibaba is sometimes called the Amazon of China. Let's compare Alibaba's valuation to Amazon. Look at that. Amazon, in this same metric of the forward price to earnings ratio, Amazon is trading at a forward PE of 65. 65, 6 times more expensive than Alibaba. Now, given Alibaba comes with a higher degree of geopolitical risk and all that, I understand that. But it's still a bargain at nearly 1/6 the valuation of Amazon. So that's why Alibaba is my favorite Michael Burry stock to buy in March. Now, if you want a bigger list of stocks to buy, I'm going to link that over here. That's a much larger list of stocks to buy. If you're interested in more stocks to buy in March, I'm going to link that up here. I'm also going to link a bigger list of my Michael Burry stock analysis over here, right? So there's going to be 2 more videos right here that I'll link to. I'll see you over there. Thank you for watching. I'll see you over there.